Hello, today is Friday, the 21st of October, and the chart on the screen, I'm going to go over more tomorrow, but I'll leave it for now as a mystery, although it'll be extremely hard to figure out what it happens to be. The numbers on the right are appropriate variables. They are not meant to be showed in a logarithmic view, but that of linear has nothing to do with any currency or precious metals, inflation, anything like that. The start date, yes, it is the 1920 period. If you do a Google search for what started in 1920, you'll see prohibition as the number one thing, and that's not it. Although, if you do search, you may get closer. This is real data by natural, unmanipulated, or not so largely manipulated movements. It can be profited or traded upon in derivatives in a way, and that's all I'm going to say about that. I'll talk about this upward move that happened in the 1930s and 40s, the sideways consolidation, why it's going to break, or why I think it'll break past this 45 and change resistance and maybe test towards 50. Now let's go on with the charts. We'll start with silver. Within this chart, which I've been pretty much stating to be pretty much nonsense within the movements, I want to talk about three different ways we could take a look at how these charts move. The first one, we'll assume we have a situation where we have a tub full of sand. We can have a tub full of even silver for that matter. That works very well. And what we do is the green bars state that we're building up the silver inventory. And this is how full the bar is. But every single time that we use some, boom, it goes lower. And we have to produce more. So we're doing all the work we did back here, but we lost a lot. Now that's a pretty dumb way of saying it, but it's obviously that's not the way the market moves. And another thing could be we could have situations where we have actual real movements within the silver price in itself because of its physical tangibles. Silver, there's new inventions needed, less inventions needed. We have supply shortages, we have excessive supplies, mining issues, all those deals that reflect the price of silver. But once again, that's nonsense. And there's even a situation where we have a free market trading system. Again, that is nonsense. What makes the most sense within this issue? And again, it's the obvious. It's the derivatives, highly leveraged, highly margined accounts. And when you talk about 99.1%, like within Occupy Wall Street, I'm not stating this is the percentages, but if you look at the everyday regular traders, even hedge fund managers, all those sort of deals compared to the most largest of accounts, there's a big percentage difference there. Again, within my opinion, as we've heard, who is it that rules the world? Exactly. Now, as far as this chart is concerned, we've moved within to this blue band, which is the 18-period average front weighted. The upper one represents the period average of highs, the lows, and the closes. When you see the size of this band in comparison to what the size was in here, it's bigger. That tells us that the volatility movements currently are bigger here and even here than they were back, at least especially in here, but even so much in here. So the movements are bigger. However, obviously we are in a situation where we had a 1, 2, 3 major candle move lower since then just regular trading. Because if we do something like, I don't know, let's just do a copy and paste of just some of these cells. The moving averages are going to make it look really weird, but let's just focus on price action. If the market would have done something like this, then you just continue its sideways trend, and that's basically why I gave that first analogy Whereas you just take a bunch of your supply and your workers do the exact same thing that they were doing before. It's just that the barrel of inventory happens to be lower. Okay, so the movement within this does signify that that there's a lot of possible concern as you move within this consolidation period. It's showing signs that it wants to leave this consolidation period. And before, when we left it in here, you spend a week and a half hugging the resistance point before you fall. If we have a big fall like this, there's no clear point stating, okay, it's going to be this day, at least simply by looking at the charts in itself. A lot of it is, well, okay, is today the day we're going to be dumping a lot of the stuff? And how are we going to play it? Because I often wonder, do they know for sure, the big players that I talk about in that 1%, 99% sort of example, whereas they know, oh, we're going to dump it. So do you think we should get ourselves some $34 calls at 12 cents? What do you guys think? And then, of course, they know the obvious answer is that of yes. And there's just so many different examples. Oh, should we sell some of the AGQ or should we go long on the ZSL? And that's one of many different financial instruments that they use. So I wonder stuff like that. Are they going to know what's happening again? Okay, so we're going to bring this down to 23 or 22. Maybe we should get ourselves some $25 puts, and maybe we should do some selling. I don't know. I think a lot of that stuff does go on, but I don't know for sure. Now let's take a look at this dollar index, and it's the monthly chart. And I've been stating for what seems now but a year and a half what a 80 resistance level would look like within this. I'm not showing you the more longer term chart before 2004, but this does give us a good idea now when this line here, which happens to be at 80.56, was used as a pierce below for resistance. It pretty much was a perfect hit at the 80 mark. This candle this month, and we're seeing it retrace just a little bit. This thing can take a long time for it to play out, but let's get serious here. This is a US index against other currencies like the euro, like the pound, the Aussie dollar, the Swiss franc, the Canadian dollar, and I'm missing one. Regardless of the fact, it's all the same. It's comparing fiat currencies with other fiat currencies. It's a lot of nonsense. Complete and utter nonsense. But by seeing this situation and by noting that this 80 level, not seen as big on this chart, check out, if you do a search for the dollar index and the name Endless Mountain, in a search, you will see previous videos done where I explain how big that level happens to be. But basically, if we do break down below this bigger level of support, and I think 70 spot even's a good number to use. This number that I have for the data from freestockcharts.com is 70.7 as the low from 2008. And what that states is that they're tumbling further than the other currencies. And I just went through some of my archives to just find one of my older Dixie charts, and this one was done in the summer of this year. And it shows the 80 level in here that was support, support, and now we can see that this area is really reacting more towards that of resistance. And when you get support with a significant lower high, 120 being much significantly lower than this 160 level, it's fairly clear that we're in this pattern of a bear market. And the final bit of nonsense will be bonds and the TLT code. I like the word code very much as well. Do I really have to tell you where the nonsense within this occurs? There's been a significantly nice upward side rally that tested the upper bands that I use, where it was resistance and resistance again. And, well, if you look at the volume, you'll find some other significant things within there. A lot of times when you see bonds go higher, then you see stocks go lower, and vice versa. They can very often or many times be counter trend trades, with one being a leading indicator towards the other. That's because of the system, or maybe it's not because, but within the transfer of currencies, you maneuver one position and then you maneuver the second one. So sometimes one play may occur weeks or months later. And if you want to reference what happened to bonds in 2008, if you look back at history, I guess that would be more homework. You will see what I mean within leading indicators. Again, the bonds in itself, it's, in my opinion, a ticking time bomb. And it's mainly the system of currency, how it's created, what it does within a society and culture, and all those other things. So, I talked nonsense within the silver and the three different ways of how it could move, like a free market. I mean, that's just nonsense. I talked about the nonsense within the dollar index, nonsense on the bonds, and even nonsense in here. And when I talk about this later Friday on the later session, which will pretty much be a day from now, then I'll go over more of the nonsense, but I'll make a lot of sense within it. Take care.